Okay, let's just take a second here. The sheer whiplash of this morning.
Right.
I mean, if you are waking up in the South Bay today, that's Monday, February 2nd, 2026, you are looking at an economic landscape that is, well, it's shifting under your feet in real time.
It really is. It's a morning of extreme contrasts.
Extreme is the word.
It feels like we're watching two completely different movies.
On the same screen.
Exactly. I mean, we usually see these kinds of shifts happen over, quarters or even years.
Yeah.
But what we're seeing in just the last 12 to 24 hours is a simultaneous collapse of these legacy retail models and this absolute explosion of defense tech.
It's a tale of two cities, but happening in the same zip codes.
Totally.
On one side, you have these massive defense tech expansions. They're literally building empires in our backyard.
And on the other side,
you have iconic, heritage burger chains filing for bankruptcy and beloved local newsstands closing their doors after 30 years.
It creates this really disorienting vibe. One minute, we're all talking about the boom of Space Beach down in Long Beach.
And the next, you're watching the end of an era for boutique retail in Manhattan Beach.
So that's the thing we have to unpack.
That is exactly what we are going to get into today. We are strictly focusing on this idea, this retail volatility. We've got a stack of reports that just dropped.
All fresh this morning.
The South Bay Business and Industrial Outlook, breaking news from the LA Business Journal, bankruptcy court filings, and even some very, very heated Reddit threads about chicken.
You can't ignore the community sentiment. Sometimes the chicken index tells you more than the Dow.
Never ignore the chicken index. So our mission today is to dissect the news from the last, say, 12 to 24 hours.
Pinpoint who's feeling the pain.
And who is reaping the massive benefits. And here's where it gets really interesting. We're going to look at how a specific local player, Voxel Micro Video Labs, could actually turn these narratives around.
It's all about controlling the story when the story is this chaotic.
Exactly. So let's start with the pain points, because the headlines this morning are just dominated by one major filing.
FAT Brands, Inc.
That's the one.
Yeah, this is the big one. Breaking news effectively from the last cycle. But the shockwaves are really hitting right now. FAT Brands has filed for voluntary Chapter 11 bankruptcy.
And just so we're all clear, this isn't one little mom-and-pop shop closing a single location.
No, not even close. This is a massive portfolio.
We're talking
Fatburger, Johnny Rockets,
Ground Table Pizza,
Great American Cookies.
Yeah.
All told, it's 18 concepts and over 2,200 units worldwide. It's a significant chunk of the fast casual landscape.
That is a huge footprint. I mean, if you live in the South Bay, you probably drive past 3 of those just on your commute.
For sure.
So why? What's going on here? I'm looking at the filing, and the CEO, Andy Wiederhorn, is using the word resilient to describe the brands.
Right.
If they're so resilient, why are they in bankruptcy court?
It comes down to the balance sheet. The official line from the filing is that they need to deleverage.
Which means?
Essentially, they're drowning in debt. It's a financial restructuring. It's that classic distinction between, operational health and capital structure health.
So you can sell a lot of burgers.
Which they are. But if your debt service costs more than your profit margin, you're underwater.
Deleveraging is such a polite corporate word for we owe way too much money.
It is. And it's a classic case of a company that, perhaps expanded too aggressively or is carrying debt that made sense in a different interest rate environment, maybe pre-2024.
But not now.
It just doesn't work in 2026. The cost of money has changed, and their whole structure couldn't hold the weight.
But for the listener, say, the person who just wants a burger for lunch, what does this mean? Are the doors locked?
No, and that is a crucial point. Operations are continuing as usual. You can still get your King Burger.
The fryers are still running.
The fryers are running. The stock is even still trading, although now it has that ominous Q suffix attached to it.
Ah, the scarlet letter of the stock market.
Precisely. It signals to every algorithm and trader that this thing is distressed. But even if the fryers are still running, just think about the atmosphere inside.
You have over 45,000 corporate and franchise employees.
Right. And that creates a massive cloud of uncertainty. That's the human element we so often miss in these financial stories.
Yeah.
I mean, if you're a franchisee in Torrance or Redondo Beach, you are waking up today wondering if your parent company is going to make it through the year.
You've poured your life savings into a Johnny Rockets.
And now the mothership is in court.
Yeah.
That creates a kind of paralysis. How do you plan for Q3 when you don't even know who's going to own the company in Q4?
That's a lot of anxiety to start the week with, but it's not just the big guys, right? We saw something much smaller, but honestly, emotionally, it hit a bit harder for the locals.
You're talking about current events in Manhattan Beach.
Yeah. The newsstand on Highland Avenue,
Yeah.
it officially shuttered this week.
And that is significant. It had been there for 30 years. That's a generation.
It really is.
While F8 Brands is a death story, current events is a cultural shift story.
It feels like the end of an era. I mean, growing up, that's where you went, and now it's just gone.
And this connects directly to that South Bay Business and Industrial Outlook report. There is a distinct shift happening in downtown Manhattan Beach.
We're moving away from traditional retail.
Completely. Away from buying goods, magazines, clothes, and toward experiential and high-end services.
So less buying things, more doing things. Or eating fancy things.
Exactly. We aren't buying magazines and candy anymore. We're buying Pilates classes and $18 smoothies. The boutique culture that defined that area for decades is, well, it's struggling.
The ground has just shifted under them.
It's the micro pain matching the macro pain of FAT brands. Legacy models are struggling.
Okay, so that is the pain. And it's heavy. But remember, I said this was a morning of contrasts.
Right.
Because if you just look a few miles down the road, the whole narrative flips completely.
It really does. While retail is restructuring, defense and tech are just exploding.
Let's talk about space speech.
This is the headline that is probably saving the local economic mood this morning. Anduril Industries.
And this news broke in just the last 12 hours, right?
Correct. The LA Business Journal confirmed it. Anduril is moving forward with a massive new campus. We're talking 1.18 million square feet, spanning Long Beach and Lakewood.
That is gargantuan. 1.18 million square feet. I'm trying to visualize that.
It's bigger than the Tesla Design Center.
It's like an airport terminal.
It's a city within a city, and the investment is staggering $1 billion into the renovation. This isn't just we rented an office. This is we're planting a flag for the next 50 years.
And what does that mean for jobs? Because we just talked about the 45,000 anxious employees at FAT Brands.
Well, Anduril is bringing 5,500 direct jobs, and these are high-tech manufacturing, engineering, defense roles.
This really cements the region's status as a defense and aerospace hub.
We're seeing a reversion to the 1980s aerospace boom, but updated for the AI and drone era.
It's fascinating. We are watching this new industrial revolution right on the coast. They're calling it space speech for a reason.
It creates such a stark dichotomy. You've got the retail sector shedding weight, trying to survive debt, and then you have the defense sector, flush with VC money and government contracts, building million-square-foot facilities.
It's a transfer of energy.
Totally. The capital is leaving them all and going straight into the hangar.
And it's not just defense, is it? The financial sector in the South Bay is quietly having a bit of a moment, too.
Quietly but significantly. Yeah, look at EP Wealth Advisors, headquartered right in Torrance.
I saw that report. They've doubled their assets under management in just 2 years.
2 years. That is a sprint to growth, as they call it. And it just highlights that the service sector, specifically high-end financial planning, is absolutely thriving.
While physical retail struggles to sell goods,
The business of managing wealth is booming.
which makes sense. If you
Yeah.
have people making money in Space Beach, they need someone to manage it in Torrance.
Everything is connected. If you have 5,500 engineers getting hired at Anduril with six-figure salaries and stock options, and you have baby boomers selling their real estate in Manhattan Beach for millions, well, that money has to go somewhere.
The winners in this economy are feeding into each other.
Exactly.
Now, before we get too deep into the serious economics, I have to bring up one more benefit story because sometimes economic indicators are just about what people are excited to eat.
Ah, yes.
And the local Reddit threads are absolutely exploding this morning.
The chicken bone BLVD phenomenon.
Yes, Zankou chicken. They are coming to the South Bay.
Specifically the Lawndale-Hawthorne area.
Yeah.
And you're right, the buzz is palpable.
I was reading the threads. People are saying, finally, and mapping out where it is. It's practically a holiday for foodies.
It's such an interesting counterpoint to the FAT Brands bankruptcy.
Right.
FAT Brands owns Fast Casual Concepts, and they're filing for Chapter 11. Zankou is opening new locations, and people are cheering.
What's the difference? Why is one failing while the other is expanding?
I think it's about the connection to the community and, the perceived quality, brand equity, product market fit.
FAT Brands is a holding company. It feels corporate.
Exactly.
Yeah.
Zankou feels culturally authentic to Los Angeles. Even in a volatile market, if you have a product people crave, like that garlic sauce, They will show up.
So we have this whirlwind. We have bankruptcy courts. We have billion-dollar defense campuses. And we have garlic chicken hysteria. It's a lot of noise.
It is high volatility.
And in a world of such extreme volatility, controlling the narrative is everything.
It's critical.
If you are F8 Brands, you are fighting for your reputation. If you are Anduril, you are fighting for talent.
And if you're a local business, you're just fighting to stay open. Silence is fatal right now.
Exactly. And this brings us to the spin segment of our deep dive. We want to look at how these companies, winners and losers, could navigate this new cycle. And we're looking at it through the lens of a specific local resource. Voxel Micro Video Labs.
Right there in San Pedro.
Yep, 365 W6 Cinca. Now, they have these specific studios and strategies that map, perfectly to today's news. So let's play a game here.
Okay.
If you were the CEO of F8 Brands, waking up to bankruptcy headlines this morning, how would you use Voxel?
Okay. Well, the problem FAT Brands has right now is reassurance.
Mm-hmm.
They have to let stakeholders know that Chapter 11 doesn't mean closed.
And a press release is not going to cut it.
No, a press release feels like a lawyer wrote it.
Yeah.
I need to look my stakeholders in the eye, so I'd look at Voxel's authority amplifier content.
Okay, unpack that for me.
Instead of issuing some dry press release that nobody reads, imagine the CEO, Andy Wiederhorn, or even a few key franchisees sitting down in a high-end video podcast format.
Mm-hmm.
They explain the restructuring transparently. They focus on that word, resilience, that they mentioned in the filing.
So you turn the negative headline into a story about responsibility.
Exactly. We are fixing the balance sheet so we could be here for another 50 years. You humanize the corporate maneuvering. You turn a financial failure into a strategic pivot.
And you get that video out fast.
If I can get that video in the inbox of every franchisee by 5 p.m. today, I might just stop the bleeding. Video does that in a way text never can.
That's smart. Okay, let's flip it. You are Anduril Industries. You just announced a billion-dollar campus. You don't need to apologize for anything. What's your problem?
You need bodies. You need 5,500 highly skilled engineers and technicians. And you're competing with SpaceX, Google, every other tech firm in California.
So how does Voxel help there?
You use the Tech and Innovation Specialty Page Strategy, specifically what they call the Creator Support Hub.
A Creator Support Hub. How does a Creator Hub help a defense contractor?
Think about it. Engineers trust other engineers. I don't want a polished HR video.
Right.
I want to send my lead propulsion engineer to the studio to do a technical breakdown of a non-classified problem they solved. Here is how we solved thermal dynamics on this drone.
You make them the rock stars.
Exactly. Voxel becomes a hub for these engineers to broadcast their innovations. You create a content series called Building Space Beach. You show the blueprints, the energy. You attract top talent, not by offering a salary, but by offering a mission.
Come be part of the next generation of America's aerospace.
You sell the dream, not just the job.
I love that. Okay, what about EP Wealth? They're doubling their money. They're crushing it. Do they even need a strategy?
Oh, absolutely. That's the danger zone.
Yeah.
Rapid growth creates skepticism.
People start asking questions.
The market asks, is it luck? Are they just riding a bubble? Or are they actually experts? They need to prove it's not a fluke.
So they would align with Voxel's accounting and tax professionals or financial services setup.
Right, and they'd use the Momentum Builder Studio.
Momentum Builder.
They should be hosting deep dives on market trends, literally talking about the things we're talking about right now.
Yeah.
Why is defense spending up? Why is retail down? How does the Anduril expansion affect your real estate portfolio?
So they become the economist for the entire region.
Precisely. By explaining the why behind the market, they validate their own expertise to new clients. It proves they are the steady hand on the wheel.
It cements their authority.
And it helps them keep those clients when the market eventually turns down.
Okay, last one. And this is the one that pulls at the heartstrings a bit. The local small business, like current events, or the next business that's afraid of closing. What can they do?
This is the most critical one. This is where the small business specialty page at Voxel is key. The goal is to transform from a local business into an industry authority.
You have to stop being a store.
And start being a destination.
How does a newsstand become an authority?
Well, look at the trend. People want connection. If current events had a multimedia presence, maybe a podcast discussing local culture, reviewing the books they sell, interviewing Manhattan Beach locals.
They become a voice of the community?
Yes. They aren't just selling magazines, they're selling the culture of the town.
So if you're just selling a commodity, Amazon can beat you.
But if you're a media personality and a community hub, you have a moat. I support you because I want you to exist. Voxel provides that bridge for small businesses to pivot to that digital-first model. It might have been the difference maker.
That is a powerful thought. In 2026, every business is a media business.
Whether you like it or not.
So, to recap this whirlwind of February 2nd, 2026, we have defense contractors building empires in Long Beach while burger empires restructure in court.
We have wealth advisors doubling their money while newsstands close their doors.
It's a day of winners and losers, and it's defined by adaptability. The tectonic plates of the local economy are definitely moving.
And the common thread here really seems to be this idea of brand amplification.
It's not just pure economics.
No, it's about how they tell their story.
Yeah.
Whether it's explaining a bankruptcy or recruiting an army of engineers, the narrative is the asset. You can't just rely on your legacy anymore. You have to constantly rebroadcast your value.
So here is the final provocative thought I want to leave you with today. We looked at FAT brands, Anduril, EP Wealth. They are all in the same economy, but they're living in different realities.
Mm-hmm.
As you go about your week in the South Bay, ask yourself this. Is your business just existing in the market, hoping customers show up? Or are you broadcasting your authority?
That's the question. Because if you aren't controlling your own narrative, the bankruptcy court or the closing sign might just do it for you.
And on that note, go get some garlic chicken, think about your content strategy, and we will catch you on the next deep dive.
Stay curious.